Welcome to Matters Financial and Geopolitical from a Frontier. I trust the week's going well. The Monetary Policy Committee's press release is seen here. They left the CBR unchanged at 9%, talked about the forex market being balanced, current account deficit down 120 basis points, private sector grew 50 basis points, that's anemic. Decline in NPL in trade, personal, household down 40 basis points. Strong pickup in the economy, up 130 basis points, but that was all about agriculture. Diaspora inflows rise 42% to hit 268 billion shillings. Cash sent home by Kenyans abroad rose 39.54% in 12 months through October, helped by increasing investment vehicles and a tax amnesty. I said remittances have been a silver bullet for many African countries and now outpace FDI, foreign aid, and any other source of hard currency you care to mention. A 40% year-on-year expansion is startling, and the number might have been flattered a little by the tax amnesty. Nevertheless, remittances remain a sweet spot, and it's underpinning the shilling. Moody's Investor Services says Kenya assets risk seizure by China. Kenya is among countries with the highest risk of losing strategic assets to China over the pile of debt it owes Beijing. As said in a newly released report that has raised eyebrows in public finance circles, Moody's says in the report that China's response to sub-Saharan African countries facing liquidity pressure has not been uniform or transparent, meaning predictability of credit implications are less clear. Even if debt restructuring alleviates immediate liquidity pressure, the loss of natural resources, revenue, or other assets is credit negative. And I think it's stated the obvious. But obviously there's granularity to the story. In some cases, China will renegotiate. Ethiopia is a good example where it makes strategic sense. In others, they'll do a Sri Lanka and take the port. And there's a continuum of this. Sri Lanka, of course, which gorged on Chinese debt, has had to disgorge the handbag tote of port to its creditor. Catraco seeks approval for electric SGR line, sought approval from the environmental watchdog to electrify the standard gauge railway. Why it wasn't electrified in the first place remains a mystery. NEMA, through the latest Kenya Gazette notice, says Catraco had filed the environmental impact assessment and is seeking to construct 12 transmission lines and 14 substations along the SGR line. Electricity will also spur growth of factories, businesses and urban centres along the railway line. Said electrifying the line would enhance the speed of the railway but could not take Kenya to speeds of over 200 kilometers per hour. Kenyan, of course, will be the main supplier. In today's interview with the chairman, he spoke about 100 megawatt demand coming out of that. Energy sales were growing at 6%. What is interesting here is we can see a considerable steepening of that curve. Rebecca spoke about this in the interview I did with her after the full year results. Speaking about the regional expansion opportunity as well. Centum is to launch a 500 billion shilling private equity fund. What we will be doing differently is that we will be raising third-party funds to invest alongside our own money. Their reported earnings per share, half-year earnings per share was up 64.25%. I've been through those earnings, but they're on the website again if you care to look. Kenya shilling 102.60, Nairobi all share down 15.47%, NSE 20 down 25.19%. Thanks again for stopping